Welcome to my channel. Please like, comment, and subscribe. Knowing the types of interest rate of the banks. As a bank customer, of course you know what interest rates are. But make no mistake, pal, there are still many people who may not be familiar with bank interests. Before getting to know more about product and service in banking, it is a good idea to know first what bank interest rates are. In simple terms, bank interest rates are defined as remuneration provided by banks to customers who buy or sell their products. Interest can also be interpreted as the price that must be paid by the bank to the customer who has deposits and the price that must be paid by the customer to the banks, or if the customer obtains a loan facility. Bank interest can be divided into two types, namely deposit interest and loan interest. Deposit interest is remuneration from the bank to the customer for the service and the customer saving his money in the banks, while loan interest is the remuneration set by the bank to the borrower for the loan he gets. In the banking industry, there are 5 types of interest rate, namely 1. Interest rates are fixed. Fixed or fixed interest rates are interest rates that are fixed and do not change until the term or until the maturity date or during the term of the credits. An example in the interest on cheap housing loan or subsidies house that apply a fixed interest rate. In addition, fixed interest rate can also be used in motor vehicle loan as well. 2. Floating interest rate or floatings. Floating interest rate are interest rates that always change according to market interest rate. If the market interest rate rises, the interest rate will also increase and vice versa. An example is the mortgage interest rate for a certain period. For example, for the first 2 years, a fixed interest rate is applied, but the following period use a floating interest rates. 3. Flat interest rates. The flat interest rate is an interest rate whose calculation refers to the principal amount of the loan of the beginning for each installment period. The calculation is very simple compared to the other interest rates, so it is generally used for short-term loan for customer goods such as cell phone, household, application, motorcycle, or insured loan, or KTA. Effective interest rate. The effective interest rate is the interest rate calculated from the remaining principal amount of the loan each month in line with the screening of the debt that has been paid. This means that the less principal the loan, the less interest rate must be paid. The effective interest rate is considered fairer to customers than using a flat interest rate. The reason that the flat interest rate is only based on the initial amount of the loan principal. 5. Unity interest rates. This method sets the amount of principal installment plus interest installment paid to be the same every month. In the calculation of annuities, the portion of interest in the initial period is very large, while the portion of principal installment is very small. Approaching the end of the credit period, things will turn around. The principal installment portion will be very large, while the interest portion will be smaller. This annuity interest system is usually applied to long-term loans such as mortgages or investment loans. The formula for calculating interest is the same as the effective method. Usually, banks will apply a combination of interest rate scheme in the distributing loans. For example, play flat fixed, meaning that the interest is one of flat system and is fixed during the credit period, and effective floating, which uses an effective interest system and the amount of interest can change depending on financial market condition. Well, that's the definition and the type of bank interest rate along with example of their application. Hopefully with the information above you can understand more about the various types of interest rate that are offered. Always remember before becoming a consumer of financial product. First, understand the financial product and the type of interest used. Thank you for watching this video. Don't forget give, like, comment, and subscribe.